This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. Happy Friday. It is July 19th. This is Not Your Advisor with NYU Grad. For those that were impacted today with the CrowdStrike / Microsoft / Delta American Airlines system outage, I feel horrible. I've heard so many stories from a few of the folks that I know that were impacted, that were traveling and or couldn't access their trading accounts. I've been there, and it's the most frustrating thing to have to potentially lose money or be impacted like this outside of your control. So it's just unimaginable to me that a company like CrowdStrike, that their whole job, their whole business is security, and they can't even update their software without things going haywire. But I digress. Let's jump in real quick and close out the week. We had, for new highs, 135. For new lows, we had 147. So pretty much on par. 69% of stocks were declining and 26% were advancing. 36% of stocks were below their 50-day. 31% were below its 200-day moving average. Now, if you look at the indices, they all close at the lows of the day, which is not pretty. Taking a look at mega cap land, you had Tesla down 4%, Nvidia down 2.6%. Majority of all of the semiconductor group was red, which is never good for bulls. Microsoft was down 0.75%. Apple was up marginally 0.06%. Google was up marginally 0.1%. Meta was up marginally 0.2%. So really they just held their ground. But overall it was a bloody day. The only green sectors for the day were healthcare up 0.4%, utilities up 0.18%. So they didn't do much either. Leading to the downside, you had technology down 1.24%, energy down 0.9%, financials down 0.8%, consumer cyclical 0.8%, basic materials down 0.8%, and industrials down 0.6%. For the week, real estate led to the upside, up 1.4%. Financials were second place, up 1.2%. Energy up 0.8%. Leading to the downside, you had technology, just a bloodbath. For the week, tech was down 5.28%. I have to just reiterate here, that is not you and me selling. That is big money selling. We cannot impact all of these tech shares this much. Especially with all the passive investing that we all do through employers, 401k, company RSUs, stock option plans. We're, as a consumer base, we're usually passively buying all these shares. So this is some heavy institutional selling. For the week, communication services was down 2.98%. That includes Meta and companies like Google and others. Consumer cyclical was down 2.93%, basic materials down 2%, utilities down 1.6%. So let's keep peeling this onion here. It was an ugly onion, no doubt about it. So taking a quick look at what stuck out, the NQ NASDAQ futures contract was struggling with 20K as resistance now, whereas prior it was support. I mentioned we closed at the lows. That's never good. Some of this definitely has something to do with a ton of folks not being able to trade today with the down outage from CrowdStrike, but I don't think it's all of the reason. What was strong today? I'll go through these real quickly. You have MicroStrategies up 14.3, Coinbase up 10.5, IREN 10.4, Riot up 9.8, Hut up 7.6, UVXY up 6.3, DoorDash 5.8, Marathon 4.5, Bitfarms 4.4, TerraWolf 4.4, the VIX up 3.7, ARM Holdings up 3.2, and the rest are all just bearish ETF funds. On the weak side, this list was pretty long, so bear with me. I'll skip around a little bit, but CrowdStrike in the headlines down 11%. You had Harmony Gold down 7.6, DJT 6.3, Intel 5.4, ACMR Research 4.8, Hims and Hers 4.6, UCO 4.2, Tesla 4, Lam Research 3.7, Semiconductor Index 3.1, ASML Holdings 3.1, Affirm Holdings 2.9, SMH 2.9, Natural Gas Futures 2.7, Qualcomm 2.7, Silver Futures 2.7, AMD 2.6, NVIDIA 2.6, USO 2.3, Gold Futures 2.2, and CarMax 2.21. So for free members, continue to watch the Mag 7, 10-year yields, economic data. Next week, we have the PCE report on Friday, and we have earnings starting to begin in full swing. So keep a watch on those. I will see you all after the break. That's my train.
Stand clear of the closing doors, please.